Welcome back, investors, to Ticker Time News. I'm Adam, and Affirm has put investors in a buy now mood. The company, which is a provider of buy now, pay later services, is trading sharply higher on a strong Q3 earnings beat, as well as on its lack of concern about funding or credit markets. Affirm also expanded its partnership with Shopify for multiple years to come and another stylish marketplace. Plus, a vertical that is taking off. Like most investors, I had concerns leading up to this earnings report, following the big sell-off that Upstart experienced after it released its earnings report earlier this week. Now, I know the companies operate in different areas, but both are fintech companies and both rely on credit markets to fund loans. Upstart guided sharply lower for Q2 and fiscal year 22. It also offered concerning comments about higher funding costs and a weakened ability to access credit markets. Upstart plans to keep more loans on its balance sheet in a, quote, market clearing move. I'll link the video that I did breaking down Upstart's earnings in the description below on this video. You watch it if you have some time. Affirm wound up reporting a smaller loss than expected with upside revenue. It also issued inline guidance for Q4, which I take as a win in wake of Upstart's guidance. Meanwhile, GMV, or gross merchandise volume, jumped 73% year over year to $3.9 billion, excluding Peloton though. And in another highlight, Affirm said on its earnings call, which was a brilliant earnings call by the way, that it doesn't plan to raise any new capital because it believes it is fully funded to profitability. That is a bold statement. Most importantly, the company did not make any concerning comments about funding or capital markets. Affirm reminded investors that while it does make it easy for customers to apply for a loan, Affirm still looks at the state of the prospect's finances at the very moment, including recent credit usage. It will instantly deny loans that it doubts can be paid off. Also, its loans are very short, averaging about 5 months. The point is, Affirm keeps a tight leash on its lending. Now, in other good news, Affirm and Shopify announced a multi-year extension of their partnership. The deal solidifies Affirm as the exclusive pay over time provider for Shopify's Shop Pay installments in the US. Starting this summer, eligible US merchants offering Shop Pay installments will be able to access Affirm's adaptive checkout offerings. Shopify is a key account for Affirm. As evident, Affirm credited its active merchant growth in Q3. Active merchants increased on a year-over-year basis from 12,000 to a mind-blowing 207,000, primarily to adoption of Shop Pay installments by merchants on Shopify's platform. That's a pretty big deal. Affirm also worked out a new 2-year extension with Poshmark for a little secondhand style. Finally, travel and ticketing is a growing vertical for Affirm. The segment has been outperforming expectations. In volume in Q3, more than doubled year over year. Expedia and Priceline were both in the top 10, and Q3 marked the general availability of Affirm on American Airlines. With airlines expected to return to profitability ahead of what should be a booming summer travel season, this was good to hear. Overall, Affirm's Q3 results were quite good, but its lack of concern about credit markets invited the biggest sigh of relief from investors all over the globe. Affirm seems to be in a better position than Upstart, and I think its short-term loan structure is probably more palatable to credit markets. Even if a mistake is made, it will roll off the books pretty quickly. I also think a bit of a short squeeze helped the stock on Friday. Now, Affirm remains a volatile stock given its lending exposure. So, if I was offering financial advice, I guess I would advise caution jumping in too big and too fast on Affirm. Just remember, patience is a tool many investors forget about. What did you think about Affirm's earnings? And join us in beating this crazy market by clicking the first link in the description. I'd love to see you there. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.